That headline number 3.2 was terrific. I don't know anybody that really nailed it or had a three handle with any intensity, but here we are nonetheless. Yes, personal consumption was on the weak side, but so were the pricing pressures, whether you looked at the GDP index, personal consumption expenditure quarter over quarter. So what is your read? We know that there's some issues here that aren't sustainable. Talk about the strength, then talk about why it can't be replicated if that's your line of thinking.
My line of thinking is that it's like a company coming up to the lender and saying, look at my numbers, they're so great, but the basic sell that they're doing, the revenues, which is consumption, was 1.2%, and the future orders, which I call the investment, was missing. And that's what my worry is. There were one-off factors like low imports and higher inventories that added to the growth, and that's why the miss was big. But going for the future, I'm looking at the future thing, where are my future orders? Where's my investment?
Well, you know, and I completely understand that. So what your hypothesis is that the worry in this number is that we have all these widgets, but we don't have the type of demand to get rid of them, and the payback for that will most likely be less horsepower in the next quarter. Is that about the way you see it, or the quarter we're in now?
I think the next quarter will turn out to be decent because the consumption will pick up. There were some issues over there. But the issue is the second half of this year and later on, because investment today is jobs and consumption tomorrow, and the lag time could be anywhere from 3 to 9 months. And that is what my worry is, the second half, not the immediate next quarter. This one-off factors will cancel out, something else will come up, and you may have about 2.2, 2.5% growth next quarter. The issue is the second half. I'm not seeing numbers getting to 2% over there because I didn't see the investment,
now,
especially on the tech side this
just
time.
out of curiosity, Professor, out of curiosity, what was your call for this number that we received this morning?
My call a few months ago was 1.7, then I reduced it to 1.3 when I saw the bad consumption numbers based on the monthly data. But this one-off factors, who would have thought that the imports will drop so big? But, you know, and the inventories will pile up.
Been marked, Professor, hasn't this recovery been marked by one-off issues? It seems as though analysts never really fully jump on board on some of the things that have moved in the economy over the last 6 quarters, and they miss it. But yet we always continually see, we assimilate these surprises and move on. Your final thought, is there anything that could raise demand at the second half that you're not thinking about now? There's a lot of issues that could do that, are there not?
Well, as I said, as I was going to say to you, this one-off factors are a sign of when the economy is transitioning from a higher growth rate to a lower growth rate, and in between you have these wobbles, and that's what really causes a lot of confusion.